not now. I'm like advanced in age, so he wants to get a feel of what we do. And I will start with, the normal disclaimers. And just to make it clear, and I mean, for him, it's the first time attending this. I do not provide financial advice, and this session is not a financial advisory session. It's educational in terms of financial markets. So, and also you must know, if you are participating in the financial markets, there is high risk. 90% of people that trade, that deals with derivatives, contracts for differences, they lose money. So I'm proud that I'm not in the 90% that lose money. I am in the elite, the 10% that make money by the grace of God. And so you must always be careful when engaging in financial derivatives, as you can lose a lot of your money and you can make a lot of money. So what I find, that most of the time when they make these disclaimers, they don't emphasize the upside. They will always emphasize the downside. But look, there is a lot of upside into this business that we are on. And just going to be looking over the past week, and also just make a commentary around the last quarter. And if you would understand that currently we're in the final quarter of 2022, and the last 3 quarters were bad, and I feel sorry for people. I always say this. I feel sorry for people who are going on retirement, beginning of next year, end of this year, because their money went down significantly in the last 2 years, and wealth has been eroded with everything that has taken place. And sorry. Someone wants to join. I need to admit. Okay. So over the past, if you look at the global indices that which we like to monitor, you can see it's all blood everywhere. The US is in deep red for the year. Nasdaq is leading them around minus 30%, and you have Germany also doing very bad, and oil as well. It was doing very well, until June, when it started dipping, and commodities also have not been doing well. So it's been, across the board, it's been a very bad season, 2022, and unfortunately, one cannot say that the bottom is here. In terms of long-term perspective, but in the short term, it might not be that far. Last week, the JSE Top 40, it closed flat at 0.4%, 0.49%. So, and I'll tell you my thoughts, around that. And USD ZAR, it's bad. ZAR has lost more than 10% this year against USD, and that's not good for our resources companies. So when it comes to the top companies within the top 40, the platinum has bounced very well, this in the last month, and you can see that Anglo-American platinum gained about 10%, in the month of Anglo-American platinum gained about 10% in September, and take note of this. When there is going to be a rally on the JSE, it's usually led by the resources sector. So if we see your Anglo-American BHP, Kumba, and the big companies start showing bullish reversals on a weekly basis, then that indicates to me that the rally is about to resume. And also, if you understand the cycles, if you understand the cycles that the markets follow around this time, not only just South Africa but globally, we entering the last quarter of the year, which is generally a bullish season. So from around now until mid-Jan or end January, it is expected, that the markets will rally. However, especially on my JC side, between July and 30th of September, I've been able to trade 135 trades, and that is 81%. And where I made the most money is from the top 40 and Kumba, Richmond. So I've just listed the top 10 companies that made me money, and in rands terms, I've been able to grow over 70% within in the last 3 months. And I'm not worried. When we see markets crashing like yesterday, like last week, even if we are long, I don't worry much, because I never expose my account like more than 10-15%. I try to minimize that so that I can handle times when times are tough. So when I say that, for example, if my account is sitting with 200,000, I'm exposing about 20,000. So if 1 week I'm losing 20,000, it doesn't matter. Like some days we will lose a lot of money. Like there was one day where, when was it? Wednesday, I was down like almost 200,000, but it pulled up. But I don't like, it's money that I budget for. So I budget for 20% at most, and then if it goes over 20%, then I get shivers. But below that, I'm not worried. And also understanding the cycles, where we are. Looking at, for example, looking at your S&P 500, where it is, the bottom is like, it won't be as high as the upside. So I'm not shaken by that, because I know that at any time, because I understand the fundamentals, at any time around now, we're going to see a 10. If it can happen this week, it can happen next week, So, and if you trade already knowing, the levels that if you get in, I'm exposing 5%. If it goes against me, I'm down 15%. I'm still fine, because I still got a lot of capital to fight with, So the problem is when people are using their entire money, into a couple of trades, into a 1 day's trade. And my thinking is that it's not wise. It's not wise to blow an account in 1 day, to expose your entire account in 1 day. I just don't understand how anyone could do that. So that's why you find me like quite relaxed, even if things are bad. That days where things are bad last week, but I still made money for the entire week in terms of my bottom line. I was able to close some trades, and my account is, I do have a portion that is looking red, but it's not something that is going to crash my account. And I think that's what we need to learn, to always never expose more than like something that will destroy your account. Always say that if I lose in a day, that day it should not be more than 10% of my account. But if you're going to be losing more than that, then you may not have money to fight with. So that, I don't know how can I emphasize that. Position yourself. Statistically, people that lose, statistically, people lose money not because they don't know what they're doing, but because they don't know how to do risk management, and they want to become rich in 1 day. And it does not take anyone to become rich in 1 day in trading, if you plan to be there for a long time. And fortunately, for some of us, we started around COVID times where the volatility was high, and within short space of time we made a lot of money. And when we made that lot of money, we decided to play strategically, tactically, so that we are not blown. And if you play with like small accounts, like maybe 10,000, and you commit, if you lose in one day, you lose 6,000, you got your account down the drain. Does not make sense. For me, if you've got 10,000, your budget should be, if I lose, I should not lose more than 1,000 rand. But if you lose a 4,000, 5,000 rand, in terms of longevity, you're not going to last long. So I will always emphasize that in my view, trading is powerful if we apply good, proper money management. But if we don't do that, then we're gonna be going around the circle in one position all over and all over again, and that's not what we want to do. So from fundamentals perspective, with regard to this, unfortunately, I don't have, when the MT4 does not provide me stats like this, but on that front as well, it's still a great month. Probably, maybe I'll just share from Think Markets my numbers from Think Markets, but they're also on that end. They're looking good, and as it stands, this is where your big indices are at, and everyone is angry at the Fed. I've read quite a number of articles how people feel that the Fed is pulling everyone with interest rates into crushing all the markets. And in terms of global economic growth, and I've looked at one of the surveys that was done by Bloomberg on economists, and they've actually revised downwards the outlook for next year's economic growth, the global economic growth, from 3.6 to now 2.5. So the future is not looking that great. And also, Wells Fargo, one of the leading international banks, they're saying that they are focusing a modest recession in the next year, but there is more that will come later. So they're still much more dovish, if I can put it that way. They're still optimistic, in their outlook. And also, in the survey that was done on the top USA companies, the CEOs have indicated that they're expecting a recession over the next 12 to 18 months. And but also they say that they expect a shallow recession. We don't know about that. Surveys, people always, people will say Trump is going to win. Surveys will always be what they are. They'll say Trump is going to win, is going to be the president for the second term, and with high numbers, but it doesn't actually come up that way. So so I noted that that view also of that survey is that they're expecting just a shallow recession, and also they don't think that it's going to impact the global economy. I don't think so. I think it's going to affect and impact everyone, as we are already seeing. I mean, there are protests in other countries. Already people are complaining, about standard of living. I mean, despite oil, coming down, we haven't seen much of a change in the reduction. One of the things that makes me mad all the time. So when I go to just share this one, when we go to Pick and Pay or the shops, and I see they putting oil is on special, and oil is not on special. Oil has crashed a long time ago. For the past couple of months, already 2-3 months, oil has crashed, and it is at pre-COVID, pre-war levels. Yet they're still thinking that they're doing us a favor when they're selling us oil at a pre-war prices. Oil should be down, so there's nothing special. There's no special. They're just fooling us. And also, one of the things that makes me mad as well is the oil companies. They are reporting good numbers because oil has not gone down, but the price of oil, the commodity, has gone down significantly. And these companies, your Engine, your ExxonMobil, BP, all of them, they're making a lot of money. And I think it was one of the countries said that there's gonna be a special fee that they're gonna charge on the oil producers in order to distribute. I think it's in Europe where that they're gonna charge those guys. uh, so those guys that they will charge the oil companies in order to to give back for the for the energy. And there's a question, Apelele, okay. Okay, no, it's Apelele is asking Chloe, not me. Okay, cool. And then also we're gonna have over the coming week company earnings reports. I think it's the biggest banks for Q3, and remember when Q2 was reported, the markets rallied rallied into into the downward trend line. So the US 500 rallied to 43,000. So the rally that happened between June until August 16, it was driven by the US companies' earnings report. So we entering that season where the markets may rally or may go down depending on the earnings report that are gonna come. So I think the next week it's gonna be Tesco, one of the biggest companies in the US, that is gonna be reporting their financial results. In regard to central banks, also, I just wanted to make a comment, because lots of volatility last week was driven by the reserve banks. So the Bank of England, at first it was it's Bank of Japan, where they bought a lot of yen in order to prop up their currency, and also the Bank of England. But Bank of England was doing a damage control following what the Prime Minister said around mini budget, that they're going to be cutting interest rates. So currently, the UK, there is a lack of trust into the current or existing government in the UK. Hence you saw so much volatility on the British pound. And also the Bank of China as well. They also played a role. They also tried to protect their currencies. So a lot of FX volatility last week was driven by the interventions from the reserve banks. And we know that this week the Reserve Bank of New Zealand they're going to be talking on their monetary policy. The Reserve Bank of Australia also is going to be talking on their currency. So the NZD, AUD, expect some movements, on those currencies. And also with regards to OPEC, oil has been going down. I mentioned earlier on. The guys, the OPEC team is going to be meeting. I think they're having their normal conference on Wednesday, and they may decide to cut. So it is expected that they're going to cut production. But personally, I don't think that will have much of an impact, because the recession and the global economic outlook weighs more. So I don't think that their actions will weigh much, on the oil prices. What weighs more, in my view, is the economic growth concerns and the recession concerns. And yeah, I think those are the few things. And in terms of monetary policies, I think they're still looking like this. And probably the European Central Bank has moved more towards closer to being hawkish. And Bank of Japan, they're still there on the dovish side. And New Zealand Central Bank also is hawkish. We're gonna hear from them this week in what they're saying. So we know that central bankers, they're taking aggressive moves in order to fight the inflation. And when it comes to top 40, personally, I was expecting 59,000 to hold and then see a rebound from there. But unfortunately, that did not work out due to all this global recession fears that happened. And I am convinced that where it is, where the price is moving at around 56,000, that's where the there is a fair amount of demand, and the buyers are protecting that. And you can also see that, from the weeks that are happening there. And also, I don't know if you recall when like where we are, I feel it's the same position where we were around the second week of August, where we knew that the market must pull back. It can never go up. But that was just based on those trend lines and so in answering you, Mr. Klo, when they reduce quantity, will they not push prices due to supply demand? My guy, I don't think so. Remember. Russia, the guys in Russia, they've been producing more and they've been losing customers. So they're still selling to China, they're still selling to India at discounted prices. So if OPEC decides to cut down, I think they are shooting themselves in the foot, because Russia is fine. Russia is able to find buyers. So even if they cut, I don't think it's material. I think what weighs more, in my view, is the inflation. I mean, it's the economic outlook that counts more. So even if you cut down the supply of oil, if they cut down the supply of oil, if there's no demand in the market, it's not going to help. It's not going to solve their problems. So that's how I think about it. So. And I've seen other guys that argue also along the lines of what I'm saying, that the biggest problem for oil for me is the economic, is the global demand. Look, the guys, they've actually, I've indicated there that the outlook, the GDP, the global GDP for next year, it's been revised from 3.6 to 2.5. So that is very significant. That is a significant amount, 1% drop. So I don't think cutting supply for oil is gonna help them. Probably with what's happening in the US, also to think about the hurricane that is taking place. Then I don't know how many plants are being affected, and how we'll see on Wednesday when the reserves are being announced, whether they dropped or and also when we see how many oil rigs are affected in the US, that also plays a role. So I think it's something that one needs to look at, and I will look at that. I will check on Wednesday. How is that report? Gonna go? So as I was saying, on the JSE top 40, the downside is limited in my view, and I've actually looked. I say we're in the same position we were in August, when we saw that the trend line, all the markets were sitting on the trend line on MA 200, where we were expecting, and then I think was it the Fed or inflation that triggered the sell-off. So currently, and if you look at the numbers, I've actually plotted this for you, and we actually followed the same approach last year. In August. If you look at in the last September, so the end of the year rally. So I've just looked at it, like from 2017. You can see the rally was triggered from the 26th of September and until end of January, and that the top 40 gained 11%. And another, in 2019, that the end of the year rally started on the 30th of September until 20th of January, until the 20th of January, and that was 11%. 2017, 2019, and then in I don't know how I missed. Oh, okay. I don't know how I missed 2018. I missed 2018 there, but nevertheless, you'll get my point. And in 2020, it started end of October, and it pushed until March, and then at the peak it was like 35%. And if you look at 2021 last year, it started on the 20th of September, and it went up by 31%. So yeah, it's a question mark. And I did put the same also last month when I was showing you that around September it's a bearish month for the markets. And talking to this, I just want to scroll to Impala. I just want to go to the last one because I think they talk the same thing. I also want you to see Impala, not Impala, Anglo-American Platinum. So if you look at Anglo-American from 2019, so this is the one that you guys need to look at if you want to invest for long term. This is not that advice. This is my view. If you look at September until February, it went up by 64%. That's your Anglo-American. 2019, 2020, it went up by 111% from the same period, and then 2021 it went up by 103%, same period. The question is 2020, 2022, what's going to happen? So that's my thinking, that the JSE is being led, is usually led by the US, by the resources sector. Okay, I want to go back to my JSE top 40. Also, if you look at this chart, you can see that it's not far off from MA200, and MA200 is known for being good long-term support. And the candle that is printed on a weekly view, it looks like a bullish reversal candle. And so any buy, and if it falls by any chance, I don't think that it will exceed 55,000. Probably Joe will express his views. And also, if you're looking at this, there's that narrow channel going downwards, and that MA200 is still holding as support. This level was broken around 20.
Hi, AK. Hi, AK. Sorry, I joined late and my network is bad. Can you hear me?
Yeah, I can hear you.
Sorry, I joined late and my network is bad. Can you hear me? Yes, good evening to you. No, I fully agree with your charts. And actually now, I see you've got that long green SBR or resistance becoming support line. And I think it's our main indicator. And so we've got number one that is an indicator. We've got your MAs as number two indicator. So basically our indications are showing us that you are spot on, and we might see a rally there. Because if that support doesn't hold, it's gonna be calamity. Thank you.
Okay, cool. And you know what gave me great confidence? I didn't put it here, but I was studying the resources index, or Celtics as well, and I saw that usually in the historically it usually leads by a week or two. The bottoming is usually triggered by the resources index. So that's one of the things that I look at. And when it comes to gold, it went down, and then as you may know, that it was due to what was happening, from the central banks making announcements, trying to save their currencies. And the previous week, I don't know if you recall, I anticipated that it may bounce to 1660, and I just want to show you this. I printed. This is the chart I had shared, my 4-hour chart last week, that probably we may see a move up to 1660, and before the bears resume. However, with the fundamentals that I am now looking at, probably there's going to be a push towards to 1700. As you can see on this, daily chart, it's the chart going downwards. 1700 becomes a very significant number, where where it can go up to, and I don't see it going upwards because the inflation and the central banks with the interest rates. So it's not that great for gold. But also what I noticed is that I usually look at the gold miners in the JSE, and usually they will precede the gains on of gold. So if you see Anglo Ashanti gold fields, those guys pushing higher, you must expect gold to probably follow. And this is my view. It's not. It's my view. Is that probably on gold is that those guys have deeper insight. Hence, you will find that they will rally before they will rally before the gold price happens, whether it's going upwards or downwards. So you can. So I would use those companies as my leading indicators in terms of where the price of gold is going. But yes, I agree with Claude. It's actually such a nice academic chart. If you're looking at gold, it's one of those nice ones. And I agree with that stop loss. For now, I'm gonna start. I don't have anything on the short side. I've got orders though around 1690, and then I will sell. I'm ready to hold a week or two, because I go in a big positions, and I don't know. I'm struggling to scalp like other people who trade on 5-minute chart on gold. For me, what's important for me, it's fundamentals. So my fundamentals cannot be like, you can't decide on scalping. So I usually just look for bigger levels. Like as you can see on my chart, I would highlight quite broader levels. And even on weekly there, it found support, and all this is depending on what's going to happen. What will the announcement look like? So this is my updated chart. This is what I probably see, probably on 1680, 1700. That's where I don't see it breaking higher than this trend, based on the fundamentals. And come to Nasdaq, and everybody was thinking, and we were thinking that the buyers would have staged their recovery. However, the Friday was disappointing in regard to the US, and they sold off. But I don't know if you noticed, after when the US closed, the futures quickly jumped. They did not go down. So usually when the market is selling hard, the aftermarket will also sell lower. But what happened on Friday is that when the US closed at night, the market, if you're looking at your 30 minutes, 1 hour, you can see it printed buying candles very fast. So it is my view also that as much as it has tested your long-term moving averages, they are broken now. We'll just have to see what's going to happen, over the next week, and even then, the bottom is very limited. On the downside is limited. I wouldn't be start shorting US 30. They all been sitting on an oversold, and it's gonna it could be a trap also for sellers, because when everybody is selling, and I always say this, it's important, when everybody is selling, just be careful. When 9%, the sentiment, the readings of the sentiments, they like in the 99, 97% selling. So it means someone is likely to be chopped. And I would take it easy from here on the Dow Jones. It dropped by 16%. So it wrote off all the gains that were made between June and August, and the next levels are a bit further for me, and I wouldn't also go on the short side. And interesting one for me is US 500. I've actually gotten my skin in the game, and I'm gonna scale up once I see it's forming. A bullish reversal, a stronger reversal. But currently, my support was 35.93. That's where it is, and worst case scenario is 34.30, 34.40. But I doubt it's gonna go there. We need a lot of money in order if one is gonna hold until that level. But I don't think it's gonna it will push unless in terms of the fundamentals something changes. And this is how I view on my daily chart. Probably we may see around here, we may see buyers coming into the party. And the interesting part for me, yes, all of them are oversold. Everything, the interesting ones, the European ones, the DAX is extremely oversold. So anyone selling, you must know that you are selling. you might get into trouble. You better stay on the sidelines if you're not sure what to do. But selling, I don't think is an option, because you want to bleed a lot of money unless you've budgeted for it. You've got enough capital to throw away. But I think when I look at the DAX, I'm not only looking at I've got this one that runs 24 hours, but I want to show you this one as well. This one is the one that moves, when it opens along the JSE and closes around 6 as well. So this one is the actual hours of the Gemini Stock Exchange, and this is how we traded. This is how we traded the last 3 sessions. And to me, that chart shows me that the buyers are stepping in. And so it's important to, when you're looking at the chart, important to look at the one that runs 24 hours, but also important to look at the one that runs during the working hours. So I also get a look on that one. And actually this one is MDEX. The MDEX, this is the one I'm referring to. The DEX. This is the DEX that runs working hours, and you can see from here. And I've got on my side, some things that give me, some bulk buying. So I saw something there. I saw that there's some buying that is coming in around this level at 11,860. So I think this one is getting ready to be bought, and I already have a trade here planned to say that if it closes at 120, that would be my buy signal, because that bullish harami is one of the it's usually like 63% successful when it forms. So that is based on my analytical system that I use. So 63% is that there might be, but also it's this one that is working for me. MDEX as well. MDEX is also supporting DEX. So if the two, I don't know, some of the guys whom we had sessions when I talk about the Dow theory, is that one of the 6 principles of the Dow theory is that indices must confirm one another. And when it comes to Germany, you have your MDEX, DAX, you have your MDEX, DAX, and Tech DAX. They have there are similarities, indications that those are starting to buy. So I'm a bit bullish. I think the downside is limited. And I also please forgive me for this. I am sorry. This is not UK 100. This is France 40. The chart is correct. It's the naming that I missed. It's the naming that I missed, and I've got it's France 40 that. So also the France 40 for me is showing me signs that they will be a buy, and I'm looking at the one that trades this one. It's the one that runs on working hours. Also, there are signs, and the crossover on the stochastic also has just happened, meaning that there are buys. And how I saw this, how I saw that, if you look at Wednesday, Thursday, Friday, and I know that many commentators on the TV, they were still calling on the downside, but these did not move as they expected, and I don't think that tomorrow they will. Probably, if they move downwards, it will be just factoring Friday's losses from the US. But I think there's more upside when it comes to France 40, and I've got a buy stop at 57.70, and I will keep a tight stop loss. And also, if it closes, if at 6 o'clock when the market closes, it closes at 57. So I'm working on a closing, on a closing price basis, not what happens during the day. So it's very important. So even on the DAX as well, when I say it, I'm looking at 12,120. So that 12,120 on a closing basis, then to trigger a buy. But if it does not close on that, then my buy is not triggered. So it's important. And also your weekly chart on a France 40, it has this I think close style of trading. He likes these horizontal supports, and so you can your nice supports. The three indicators that are supporting this, on weekly basis. You can even look at your stochastic. Stochastic is on the bottom line, and that's why it usually reverses, and your MA as well. So it's one of the strong ones in terms of the buy that I see that the buyers are going to step in. And USDs are I've tried to make some bucks on this one, and I have not made a lot, but I had sell at 1810, and then it triggered, and then I had to offload at 1790. But I'm still gonna sell more because I know if you look on weekly, 19 rand comes up, and one can say can argue and say that there's a breakout of this 17 rand, and I think the USD has been too hot and it needs a breather. If you look at the USD index, so it's currently around 114, and it's overstretched in my view also. And I think when the USD index is pulling back, then we may get a nice trade there. But I mean, at these levels, it does not stay there for too long. At 18 and 19, it does not stay there, for too long. So anytime soon we may see changes. And I've spoken of this one. This is Anglo-American. And when it comes to the following week, important big news is on Friday, the NFP, and it's a challenging one. I don't know if you know the U.S. Federal Reserve, their inflation. their policy, their monetary policy, is aligned into creating full employment, and our South African policy, monetary policy, is aligned to inflation targeting, making sure that inflation is low. So if the if the US employment on Friday comes very weak, it may be a good sign and an expectation from investors that maybe the Fed is going to scale down on the interest rates. But on the other, because remember, their mandate is to make sure in terms of employment, full employment. So if the employment numbers go bad, then they may scale backwards in terms of how they're fighting the inflation. But at the same time, when that happens, we expect we are also seeing as a good sign of a recession that is taking place. If they hold on interest rates, then the spending is going to be more. So it's a trick for them on how they're going to fight this, because they must deal with pain. Powell said that they must embrace some high level of pain. Some level of pain. And now, because if they let the pain to continue, then it's gonna be worse. But if you then also look at what the other markets are doing, if you look at London, the UK, Bank of England, they actually sort of buying bonds and pumping money into the system. Look at China. They're forcing, or they're not forcing, they're saying the banks must lend money, and they're also applying what you call not restrictive monetary policy, a loose monetary policy, in order to push up the economic activity, and also to prompt up their market, especially with the property market has been hit so hard. And I think what's important for me this week is NFP. We want to see how is that going to come up, and some employment, some company earnings reports that will come through, and and see what's going to be the follow up from the UK, and also this lady, the new prime minister, in the UK. She actually backtracks. She's backtracking. I read an article yesterday. She said she was misunderstood on a statement around, tax cuts, because why there's loose and weak confidence on the UK economy. It's because they don't. The market is not confident on the government in place. So I had a backtracking. I think she's backtracking on her statement, because the market did not like that. She wants to cut, rates. The government already doesn't have money. So how they're gonna function if they're cutting rates? If they're cutting taxes, question, guys. I've done my side. So no one has a question. Guys, I wish you the best. Tomorrow, take it easy. I'm not going to be putting much. I just want to see how the market responds in terms of, in terms of what happened on Friday in the US. It's very important. And in any day we may see the market buying, and I'm not going to short anything. I'm not going to short the indices. This is the last quarter, and it was so hot. In our side, it was so hot, and I wish I was with the kids. They were swimming outside. It's very hot, and I thought Durban was a bit cool in the morning. and I'm already feeling like in a festive mood. I don't know, for some reason, I'm in a festive mood, and it's all good.
No, I think if you're in a festive mood, AK, it means you've made good money. That's great.
No, my guy. No, my guy. Look, we made good money. To be honest with you, I'm quite happy the last quarter. So the thing is, what helps me, Joe, is that I sit back and I analyze the data. I constantly look at the data and see what the data is telling me, and I get discomfort if the data is not looking right. So that's why I can deal with a bad week, because I know that the bad week is not a reflection of the last month, of the last quarter. You understand? Maybe
Yes.
if I would have 3 weeks in a row, maybe 4 weeks, then I would be depressed. But at this point in time, my guy, I think we're looking good. And then I've got, I don't know whether it's good news or bad news. I'm in discussion with other guys, with other guys with a lot of money.
No, I think definitely collaboration is key, and with us, we're given a chance to even make money when things are not looking good, but based on calculated moves and informed moves, definitely. But thanks so much, AK. I think we'll be on the lookout. What's important, as I always stress, is the key entry points. If it's going up and you enter in the middle, it will always be a challenge. And if it's going down, you enter in the middle, again, it's always change because of the FOMO. So I think these key points should be guiding us, because when you are entering long in these cases of this US indices and the European indices, the nice thing is that we can maximize on our stop losses because we won't lose much and we can gain more. So I fully agree.
And then so the guys is that, you know what, like when they make a lot of money at the beginning of the wave, that's a thing. That for me, it always worked very well. Like at the beginning of the wave, you make a lot of money, and then towards the end of the wave, you just put in there not big positions.
I think also, lastly from my side, that's something that I always tell Gabby. It's just a pity. This last 2 months, I'm just off, guys, and I wish I could, have more time. But what I tell her is that when you're in a rally and you studied it well, don't be afraid 70%, 80% through. Get out and don't trade anymore.
Yes.
Because you've made good money. So I'm one person who doesn't wait, and that's my nature. I don't wait for TPs to be hit. So most of the time, when I feel this thing has given me 80% of the pips or the volumes that I was anticipating, I close and I even go against those TPs that I've set, and I'm at comfort knowing that I've gone through 80% of wins, because sometimes it just stops and it frustrates you along the way because it never goes up, as you plan with your eyes. It does its funny things. So I don't want to panic while I've made enough money. And maybe that's a taker from me, and as an advice to the colleagues, that there's nothing wrong in taking money although you didn't make full 100% of your raise.
So what I do for me to manage my psychology when I always say that I may take off 80% of the position and keep the other ones as a buffer, just to keep me, because I don't like to see like deep rates, right? So
yes.
So as it goes, I keep on stacking, and then I would have when it starts being red, at least there's other ones that
are still propelling you. Yes, that are very strong in the green. Yes.
So that's how I keep my psychology. I don't literally like close on everything, but I take most of the money. And also, even with the deep guys, like on the top 40, when it hit 55,900. But thing is, I feel for you, right? Because some of the people, right, they will just commit a lot of their account. Can't mean I can keep on saying, we buy, because I can handle that, right? So on 55,900, like I just went in, and I mean, and on this day it was a good day, my guy, because I started close 50%, from all these positions that I taken at 55,800. I mean 55,900.
Yes.
So to start loading, but now the odds are on the upside. But depends on your risk appetite. How much are you willing to to commit to the market?
Fully agree, AK. Thanks so much for the insight and the time that you took to bring us up to speed, and we'll meet each other in the group when one gets time. Thank you.
Okay, thank you guys. Thank you.
When one gets time. Thank you.
You're welcome, Mr. Shilembe. Babu Shilembe, I'm gonna send you my presentation.